Stocks rose as market bulls saw a buying opportunity after the threat of North Korea pulled Wall Street lower for 3 days straight. The Dow Jones Industrial Average climbed 0.08% on Friday, August 11, the S&P 500 gained 0.13%, and the Nasdaq added 0.64%. Still, the main indexes have not yet recouped losses sustained over a 3-day stretch of red ink earlier this week. The S&P 500 sank 1.7% from Tuesday to Thursday, the Dow fell 1.1%, and the Nasdaq dropped 2.4%. Those losses dragged the S&P 500 down 1.5% for the week, its worst such showing since the week ended March 24. Facebook and Alphabet are incredibly cheap. Jim Cramer says global markets have been on edge since Tuesday, when President Donald Trump warned North Korea of severe retribution should the authoritarian state proceed with any more missile tests or threats. Trump said that further threats would be met with fire and fury like the world has never seen. He doubled down on those remarks on Thursday, suggesting that perhaps his rhetoric wasn't harsh enough. And in a Friday morning post on social media site Twitter, Trump wrote, "Military solutions are now fully in place, locked and loaded, should North Korea act unwisely. Hopefully Kim Jong-un will find another path." Trump's threats have escalated since reports broke at the beginning of the week that North Korea had successfully produced a nuclear warhead that could fit inside its missiles. The UN Security Council voted unanimously on Saturday, August 5, to impose new sanctions on North Korea after Pyongyang conducted several missile tests. North Korea has since threatened to launch missiles at the U.S. territory of Guam, and the country previously threatened all-out war, wiping out all the strongholds of enemies, including the U.S. mainland. Tom Elliott, international investment strategist at Davery Group, said that in all likelihood, the North Korea problem will persist for years to come, with the U.S. and increasingly China attempting to contain and restrain Kim Jong-un. He knows that any use of missiles nuclear-tipped or not against the U.S. or one of its Asian allies, risks a retaliation that will lead to the end of his family's rule of the country. Therefore, there is a high probability that the current tension will ease off and the recent flight into defensive stocks will reverse. Investors flee to safe haven assets as North Korea tensions heat up among individual stocks. JCPenney Co., Inc. JCP slid 17% after reporting a far worse quarter than expected. The retailer's net loss of 20 cents a share was 2 cents deeper than a year earlier. An adjusted loss of 9 cents a share was twice as bad as analysts expected. Not good. Penny's $2.96 billion of sales did beat analysts' $2.84 billion estimates, but same-store sales declined by 1.3%. For the full year, JCPenney reiterated adjusted earnings guidance of 40 cents to 65 cents a share, wrapping estimates at 49 cents. Meanwhile, Snap Inc. Snap tumbled 14% after posting a deeper-than-anticipated loss and weaker user numbers over its second quarter. The messaging app company reported a net loss of $443.1 million, far wider than $115.9 million a year earlier. On a per-share basis, a net loss of 16 cents a share came in deeper than consensus by 2 cents. Revenues rocketed 153% higher to $181.7 million, yet still fell short of estimates by $5.13 million. Average revenue per user more than doubled to $1.05, up from 50 cents a year earlier. That also missed estimates of $1.07. Snap had 173 million daily users during the quarter, a 4% increase from a year earlier, while analysts were hoping for 175 million users. Snap's dismal Q2 results prove it's not turning into Facebook anytime soon. Among other techs, record second quarter earnings and revenue from NVIDIA Corp. NVIDIA weren't enough to prop the stock up Friday. The chip maker's shares fell more than 5% despite profit of $1.01 a share, higher than the consensus of 70 cents a share and the 8th straight quarter of better-than-expected earnings. NVIDIA's sales rose 56% to $2.23 billion, exceeding estimates of $1.96 billion. Gaming revenues also increased 52% to nearly $1.2 billion, with games such as the Call of Duty and Star Wars franchises contributing a healthy boost to the top line. NVIDIA CEO Here comes robot taxis elsewhere in the market. Nordstrom Inc. JWN rose slightly after exceeding profit and sales forecasts over its recent quarter. The department store chain reported earnings of $110 million, or 65 cents a share. That was lower than a year earlier when Nordstrom had reported $117 million, or 67 cents. Analysts had anticipated 64 cents a share in profit. Revenue increased 3.8% to $3.79 billion, beating consensus by $40 million. Same-store sales were a particular bright spot. That measure increased 1.7%, a surprise to analysts looking for a 0.5% drop. Nordstrom also bumped up the low end of its full-year earnings forecast by a dime to $2.85. What Macy's CEO has planned for the storied retailer.